Hey everyone, so in this video we'll look at how the broader market is shaping up and also what the accumulation data is telling us and how to play the broader market in the coming days. Okay, so this is the small cap index chart. So if we do a stage wise analysis on this, so here we were in stage 1, after that continuous up move, stage 2. So in that we almost rallied from levels of 10,000 to 16,700, almost a 66-67% kind of a rally. After that we have started falling, although as per stage wise analysis we are still above that 30 WMA mark, which suggests that we are in stage 2. So even in my opinion we are not going to fall as of now. Some consolidation or a range bound activity is going to happen, wherein we might just do up and down on this thing until the 30 WMA catches up, and then we finally break below that particular level, right? So the data, if you look at the accumulation data, that hasn't been that great like what we saw like in the March month last year it was very strong. So this year the same kind of accumulation is not seen yet, although today at these levels wherein there is a support, right? So at those levels we are seeing a little improvement in the accumulation. So probably one bounce might come in, we may do something like this and then probably fall, right? So if we do that, then it would be a bigger head and shoulder kind of a pattern, in which probably the levels that you would look for would be around 13,300 thereabout, right? So 13,000 around these levels. And even if you look at the charts, right, the 13,000 retest was not done. So high chances that we come back to these levels and do a retest before moving back up again, right? So that is quite a possibility, but that would take some time. It won't be immediate. I don't think we are going to keep cracking continuously. Probably tomorrow itself we might see some kind of a bounce, because there is a decent support at these levels, right? And a head and shoulder kind of pattern we might make and then finally break down, right? So it might be, let's say, April end or even before that. But on the mid cap index also something similar, you can see that it is struggling to make a new high, right? So if we crack below this, then definitely it has started making lower low, right? So let's see what that does. But if you look at the stage wise analysis, even the mid cap index is above the 30 WMA line, suggesting that we are still in stage 2. So stage 3 usually goes on for some time, wherein a bigger distribution happens. So the main triggers, like we haven't really talked about, is the SEBI instruction to these mutual funds to safeguard the retail investor, this thing, so that they don't buy at extremely high valuations, which will lead to big drawdowns in the coming days, right? So after that the accumulation has definitely gone down. We are not seeing that kind of accumulation in this broader market, right? Which is kind of leading to this fall as well, you can say, right? So both the small and mid caps may be around some support, wherein they can see some kind of a bounce, right? But the larger structure looks like we have made a top in both small and mid caps. Even if there is a melt up, there is a big rally coming in, that would be most probably in the large caps, right? So why do I say that the large caps are going to do extremely well? So if you look at what the large caps are doing, right, so they are very close to the all-time high, right? So if the all-time high is around hardly 1% down from the all-time high, so high chances that Nifty outperforms. And usually when something hits all-time high after a decent consolidation, you can expect a 8, 10, 12% kind of a rally. So looking at 22,000 as a breakout point, we would say that okay, we can go up to 24 and a half before we hit some kind of a top, and in the best case scenario even 25k in this rally going into the election, or even let's say just after the election results are declared. Then we can see one huge spike, and then we kind of make a top there. but the small and mid cap index are going to struggle because it's like extreme valuations in most of them. And also the scenario, like I have explained in another video, that by June probably the global economy will also start going down, and we might see a big drawdown even in the US markets and all around the globe. So this is the analysis as per today. Some kind of a bounce expected in small and mid caps, looking at the levels that we are in. But the thing is, it has to give you a reversal candlestick tomorrow. Only then we can be sure, or else this can even go lower before we kind of bounce a bit. Okay, so play cautiously. If you can stay out, it's better to stay out from the broader markets because of the valuations. But and maybe try looking at these large cap names which are not that expensive, and also where the foreigners and even the DII money is kind of flowing. So what is happening now, since these mutual funds can't put more money in the small and mid cap space, they are targeting the large caps which are kind of undervalued. So it makes sense to be invested in the large cap stocks as of now, until this the small and the mid cap index find some kind of a bottom before we can start buying them again. Okay, so this is my take on the small and mid cap space and also the overall market. So until probably April, May, we can still be in an up move in the Nifty, whereas the small and mid caps will just give you bounces, make a lower low, lower high, and start correcting again. So not a great time to be an investor in, let's say, most of these small cap names, unless they are making higher high, higher lows. You can be invested in those kind of companies. Hope this helps. Thank you.